credit on Main Street because the Fed never got into restrictive territory. Now, why? Why did the Fed stop well before rates ever got restrictive? Because the wheels started to fall off the bus. Signature Valley Bank, Silicon Valley Bank, or Signature Bank, Silicon Valley Bank went belly up. The dominoes started to fall, and they would have kept on falling had the Fed kept on hiking. Well, they stopped hiking, and they, stopped the financial crisis. Well, now that they've taken away a lot of the easing, this is like a hike, right? Even though the Fed cut rates today, for all practical purposes, they just hiked them, right? Because they're less loose. They took away some of that punch bowl. And so I think this is like a hiking cycle that the markets didn't expect. And so we're going to resume the financial crisis that was interrupted when the Fed stopped hiking. Now that they've kind of started a tightening cycle, we're going to resume that financial crisis. Look at the industrial production numbers that came out. These are horrible numbers. Industrial production dropped by 0.1%. Dropped. So we got a booming economy. We got a remarkable economy, and our industrial production is going down, right? And they revised the prior month down more than it was originally reported. It was down 0.3, and now we found that it was down 0.4. I wonder what they're going to revise this month's to. They were looking for a gain of 0.3. Manufacturing output was supposed to rise by 0.5. It only rose by 0.2. But you know what? They took last month's decline of 0.5 and they increased that to minus 0.7, which means we're basically unchanged from the minus 0.5 that we had the prior month, which is now minus 0.7. Capacity utilization tanked. It was 77.1 last month. They expected it to notch up to 77.3, and instead it tanked to 76.8. So we're utilizing less of our capacity because the economy is weak, not because the economy is strong. So Powell is just ignoring all this because he wants to claim the economy is strong because he wants to take credit for it, right? He pulled off this miracle. Nobody thought he could do it, and he did it, right? So he's going to keep on saying this. And at some point, he's not going to be able to continue telling that lie. Anyway, let me get back to some of the lies from the press conference that we had today. So the first question he got was a good question. I think it was a woman. I don't remember her name, but she just said, "Hey, Powell, why cut rates at all? Right? If inflation is high, like you said, and it's sticky and it's not going down, and the economy is stronger than you thought, why are you cutting rates?" Right? Which is a good question. And he really didn't have a good answer as far as I'm concerned. He cut rates because the markets expected it. He didn't want to hurt the markets. Well, guess what? The Dow was down 1,100 points, and that was the best performing of the indexes, with the NASDAQ down over 3%, the Russell 2000 down over 4%. So he disappointed the markets without even trying. But I think that's the only reason. But yes, he was talking out of both sides of his mouth. If you just heard what he was saying, it made no sense to cut. In fact, it made no sense to indicate that more cuts are coming. What he should have said is, look, we can't cut at all. We need more, inflation needs to really start to break. But he still is, maintaining that he thinks we're going back down to 2%. Even though all the indications are we're not. I mean, the only thing that's happening now is we got a stronger dollar, which should help. But I don't think it's going to be enough to offset what's already baked into this. But that stronger dollar is going to exacerbate the growing inflation threats outside the United States, which I mentioned earlier in the podcast, which nobody is talking about. He mentioned that the downside risks to the labor market have cooled. He's not as worried about the labor market as he was. I don't know why. He should be a lot more worried. And he said, but it's cooled off. It's not as red hot as it was. So he's welcomed the cooling, but he doesn't even think it's going to cool anymore. I don't know why. But we've gotten so much negative numbers with all these downward revisions to employment. Let me see. Talked about policy still being restrictive. But he said he wants to watch inflation carefully. See, this is another thing the markets didn't like. We're going to watch inflation carefully before we make our next move. And so what he's telling the market is if we keep getting these hot inflation numbers, if we don't get more progress, we're not going to make more cuts. So even though the Fed is signaling that we may have 2 cuts in 2025, we may not have any cuts. If the inflation numbers don't come down, those cuts are not going to happen. And if those cuts are not going to happen, the market's going down. Stock market's going down, bond market's going down, real estate market's going down. In fact, the Fed cut rates today and the bond market got clobbered. So stocks and bonds, regardless of what you own, they both went down. The markets are not cooperating with the Fed. Again, that's why I think the Fed's going back to QE. The only way they're going to get a meaningful reduction in long-term rates, at least short-term, a short-term reduction in the long-term rates, is if the Fed buys those bonds. And the only way the Fed's going to be able to buy those bonds is if they print the money to do it. And so they got to go back to QE. Now, it's not going to work long-term. I think that's going to blow up in their faces, but, they're going to do it anyway because they got nothing else. Again, he kept talking about how the economy is in a really good place. He said that a few times. We're in a really, really good place. We're in an awful place. We're between a rock and a hard place. We are nowhere near a good pace. He said, but rate cut path is slowing due to stronger growth and higher inflation. Again, he admitted that. Our path of rate cuts is slowing down now because the economy is stronger than we thought, which it's not. I don't even know where they're coming up with that. But inflation is higher than they thought. That is a true statement. And it's actually a lot higher than they thought, and it's going to get a lot higher. And that's when he talked about the natural rate being higher. And he talked about more uncertainty. He said there's a lot more uncertainty now with inflation. So the Fed thinks that inflation is going to come back down, but they're not really certain, or they're less certain than they were before. And that also spooked the markets. Then again, I already mentioned this, but he acknowledged that it's going to take years for wages to catch up with prices. Problem is they're never going to catch up because prices are going to start rising a lot higher. Yeah, he said he's not going to settle. I already mentioned a lot of this stuff. I'm just looking at the notes that I made while I was listening to him talk. In fact, I was listening, getting ready to go on Fox Business with Liz Claman. So I was, listening and, doing other things. They would not settle for 2% inflation.